Hello, happy Saturday, January 10th. How are my favorite people doing? Hopefully well. This is your weekend update on indices, stocks that we're following, and precious metals. So let's get right into it. All right, guys, there's going to be an overriding theme this week, right? Something from our last analysis. I have marked vertically on every one of the charts Friday. So that was the last day of information that we had before my previous weekly update. And I want you to notice that two things are going to be the theme in everything. One, the all-time high anchored VWAP and the all-time high for most of these instruments that we talk about. So what we had last week is that we closed below the all-time high anchored VWAP, which is this red line. Here's the all-time high. We're looking at the NASDAQ right now. We closed below that, but on Monday we closed above. Tuesday we closed above. We continued rose. We had a momentum increase. Now this momentum signal you see that is green. This is my proprietary matrix indicator that is based on about six key factors that determine momentum based off of my education and experience. For those that don't know, I'm a certified research analyst through the Chartered Market Technician program. So rather than put a whole bunch of other indicators and lines on here, I make it very easy with a color-coded system. So momentum is high. We had a slight throwback on Thursday, and then we challenged into this resistance zone that I identified here between 25,700 and 25,850. You can see where these wicks exist, where sellers exist. We ran into it, got sold down, and now we have a strong close into it. So at some point, this resistance zone is going to break because momentum is high. And when it happens, that could happen this coming week with continued momentum upward, where we will challenge the all-time high, which is our next resistance point. When that occurs, I would anticipate the NASDAQ to get trapped between these two levels before it makes a decision up or down out of it. And we want to track that all-time high anchored VWAP if it drops down. It's a very common occurrence, and if you don't believe me, you can see this resistance zone, this all-time high anchor VWAP where we oscillated also. So we have currently closed into a short-term resistance zone that may break, and then we would expect about 1,000 point increase into the next resistance zone. A break above that will set new all-time highs. On the S&P 500 SPX, you're going to see kind of a similar theme. There wasn't an upper level that it got trapped in. However, you'll see that this vertical line last week we closed below the all-time high. We regained that on Monday. Tuesday had a throwback on Wednesday and tested and confirmed this cross, right? When a key level or a key indicator is crossed, it will often be tested to be confirmed. That's what we had here. It held, and then we have our momentum signal heading up into past all-time highs into that critical 7,000 zone that I've talked about multiple times. You can see we tapped the bottom of it. It is about 25 points wide. So we're looking at 69.75 through 70.25, where I expect strong resistance, meaning that we can break it, guys, but I don't see us breaking its first attempt. We'll have a drawdown that's probably going to be back to the all-time high multiple times before we break out, if we break out. So again, we closed above the all-time high. That says we're heading to the all-time high anchored VWAP, which says we're going to head to all-time highs, right? And now all this information is based on the current movement. Now, if we have some unforeseen catalyst that comes in, right? So one thing we want to talk about is Friday at 10 a.m. Eastern Standard Time, the Supreme Court was supposed to rule on the Trump tariffs being legal or illegal. The markets kind of held its breath, and then the announcement was coming out. They weren't going to rule on that. At the current time of this filming, I am uncertain when that is going to be. But if those tariffs come out as illegal, we're going to see a drop in the markets. But until then, I think we're going to continue upward. The Russell did the same thing. The January effect is in full swing, folks. That means that historically in January, our small cap stocks run, which is what we're seeing. The Russell contains the small cap. Again, the white line represents Friday. We had closed below the all-time high anchored VWAP. We on by Tuesday we regained it. You can see we have a shift of momentum and then full momentum swing up, which pushed us into and through all-time highs. When you have these red boxes that are mean reversion levels or high resistance levels, they do not break without strong momentum. And of course, one of the key things I look at in that momentum calculation is volume. Volume is pretty decent. So what I would anticipate in the Russell here is we didn't have a significant retest. We did cross, kind of tap and go, that we may see this coming week kind of a touch confirmation and continuation up. Again, without a negative catalyst, it's looking pretty good upward. So those are the indices. Let's look at a few key stocks that are inside of these indices. NVIDIA sold off over this week. You can see that Friday we were here on, let me change that. You can see, I'll identify it for you. We had popped up with some decent momentum. I raised my stop loss, this red line. We had called this a buy back in April in the $90 to $105 range. And we bought many times or multiple times in lots because that was a great discount. And we did run this stock up to $212. I did raise my stop loss at that time to 150. Now, may I ask, Sean, why would you leave that much money on the table? Because my thesis at that time was that I want to hold this stock for a very long time. Therefore, I must leave a buffer for some significant drawdown while locking in 50% profit. Since then, we've had some negative news come out about potentially NVIDIA cooking the books, selling to themselves by selling, donating or investing in, ChatGPT, then ChatGPT turning around and buying their chips. So basically, they're paying from one pocket to the other. The fact that Google may be taking part of their market share in 2026, and the fact that Meta might not be using them. So there's a lot of negative fundamental news coming out about them. Doesn't mean it's going to drop, but if it does, I want to make sure I'm beginning to lock in as much profit as possible. And so I have raised my stop loss to 182. Now, I was at 182 when we were up here in the 192 range. We came down as low as within a dollar of my stop loss this week. We do have this orange is initial weakness in momentum. I may be kicked out beginning this week of a swing that I planned on holding for a long time that I'll end up holding, what is that, 9 months? All right, but that'll be almost 100% profit, be about 90% profit for me. And I'm fine with that. I do not want to endure further drawdown at this point. Now, if it does draw down, kicks me out, and in a month or two, I get a good technical read and good fundamental read on re-entering, I'll be happy to buy it again, but that's where I am positioned. At 182, I will be out of this position. Doesn't mean I will stop analyzing it. This is just a lot of things I talk about are ones that we trade as a thesis, and then I have my money in. So keep an eye on that one. The all-time high is 187. The all-time high anchored VWAP. We did fail that. If we held that, I would anticipate rising prices. You can see resistance at 195 and then 200. We'll have to regain that all-time high anchored VWAP for me to stay in this trade and for us to challenge those prices. Again, that's just how technicals work, guys. Palantir isn't doing much. It's just oscillating in around that all-time high anchored VWAP. It needs to gain and hold that to challenge 199, 200, and then it's all-time high up around 207. But there's a lot. But Palantir with wartime thesis is a very good stock. If you think that globally with the stuff going on in Venezuela, that some of the wartime stocks will be getting movement, we would anticipate Palantir to move up. But right now, I don't see it as necessarily a buy unless that's your thesis until we regain that all-time high anchored VWAP. I did own Palantir, a lot of shares back when it was $8, right? And I sold that as I was developing my portfolio. I made 300%, sold it around low $20, $24, and that's one of those ones that be, man, it would be great if I held it this long. But you got to understand, why are you investing in something? Is this at that time I was accelerating my portfolio, so I needed to roll that into other trades. That was something that I couldn't allocate those funds and sit on for years. Now, something like BBAI and some of these AI stocks, I am doing that. Let's get into those. Before I do, let's talk about MP Metals. This was the trade plan that I put out for that I talked about last week. So last Friday was here. Let me find it here for you. Monday, Tuesday, right in here. So we talked about buying in this buy zone. It gave the buy signal. I told you to stop loss right below that box and then write it to the all-time high anchored VWAP. And guess what it did? It did exactly that this past week. So this was a solid trade plan right here. And you see that rejection. You don't think these anchored, and then this VWAP is a significant breakout anchored VWAP that are combined together, which provides strong resistance. A close above that, we'll call it 67.50, is what we need to get to the next resistance level, which is above us. Right now, if it doesn't close above that, I would anticipate oscillation or channeling, as it were, between kind of these key levels before it decides to make movement. So you might get another buy opportunity, and that buy opportunity might not be towards the bottom of the box. It might be toward the top of the box. So now into the AI thesis, guys. We know that AI is the wave of the future. It's a matter of betting on which companies will come out on top. So if we had hindsight from 5 years, we're like, oh my gosh, this company right here was the one to buy. Well, we don't know. A lot of them are very speculative with current strong fundamentals. So it's best to buy small lots in each of them. BBAI, guys, is a buy, I believe, all day long in this $5 to $6 range. Now we keep tapping in and out of it, right? And that's fine. I know some people buy and get a little worried when it comes back down into the zone. Guys, my plan is I've already bought 3/4 of my allocation at 550. I'm willing to buy it again as we approach this bottom wick here, which at the bottom of my box, $5. If it comes down there and finds support, I will buy my final allocation here. And then my stop loss currently, you can see, is at 399. If I add another 25% to this and be fully allocated with I'm comfortable with, I will not move my stop loss until the price rises out of the zone. And when it does, let's say it gets up $7, $8, I'll go break even and then I'll try to trail it with a decent buffer to stay inside the beta. Because to me, this is exactly like Palantir was back in the day. It kept giving kind of those low prices, would oscillate like this, and then in and out of the price zone where you could buy it, and then it took off and then continued to take off. I'm hoping that BBAI is what Palantir is 5 years after investment, right? It would be great to see this at $170, especially with the amount of money that I've allocated into it. And the difference between this and Palantir, for me, when I traded Palantir before, I have the capital now that the allocation I'm putting in this, I don't need it for trading. I don't need it for other investing. I can let it sit, right? And this is important for you to know. If you're trying to accelerate a portfolio, then you can't sit on trades for a long time unless you just plan on setting them and forgetting them. If you want to be a more active trader where you're catching percentage moves and then you got to take the percentage, accelerate it somewhere else, take the percentage, accelerate it somewhere else. Eventually, you build a nest egg big enough that you can say, hey, I can allocate X dollars and just let them sit there. I don't really need it in the acceleration phase. Nor should you use your entire portfolio past a certain point to do acceleration. So if you have any questions like that, you can throw them down there in the comment section. I'll be happy to answer them. All right. And how I do that and what I teach. Again, um, the all-time high anchored VWAP sits within that range. I always include that in the buy range, and it's currently at 590. The bottom range is 550. I still like the buy. I don't, even if it comes down in here and just kind of hovers, I still like the buy. And I'm still going to respect my stop loss. If the markets crash and I lose, a little over $1 per share, I'm fine with that. Guys, you have to be fine with a disciplined trade plan and taking a loss on a disciplined trade plan. Because if you maintain your trade plan, historically, you're gonna end up winning at a high rate, right? Your net gain will be high. So Pony, looking good here, guys. What I want to see, we had talked about um, this explosive move above this last week being a buy. And last week I said that we needed to continue to close outside this and then did Monday and Tuesday. And look, our momentum indicator. So this is forming a little half mast, right? So I would anticipate that if this were to continue, this is how half mast formations work, that we're going to head up into the $20 range, which is a great take profit if you bought down here. Otherwise, you need to stay outside of the beta bounce that we're going to see in this area for resistance, for sellers and profit takers to take over, and then for it to go again. But if this plays out to $20 and you bought it in around 13, 14, 15, I think 20 is a great take profit to accelerate. If it's money again that you're not accelerating, you can let it sit, but I would go to at least break even or lock some money in. If you bought it $15, lock it in around 17, stay on the half mass portion of this formation to see if that plays out. Now remember, this is a half mast on the daily. The half mast by the book was actually built on the 2 week time frame, but technicals work on all time frames. I'm simply telling you that the true half mast formulation is on a 14-day or 2 week time frame. So QVTS um, oscillated as you see. Let me get to Friday. There we go. So I called this a buy down here. A lot of people bought it and then sold it at this breakout and all-time high anchored VWAP in this zone. Did great. That's a great trade. So they traded it from, here to here. That's great profit, right? And now it rose above and broke. We need, in order to get up to $37 and its all-time high. And why am I identifying $37? Guys, you can see on my chart here, price is the first thing that sets support and resistance, not indicators, right? Price. And then we confluence it with indicators, right? So once we close above this, and even this, you can see that dashed line I have is an alert. Why do I have an alert there? To set the alert, you scroll up the side, you click on the plus button, and you can put an alert on price. The reason why I have that is we need to break and hold above that level now in the near future to now continue on up to challenge that price and that price. But one thing I want you to notice that it is doing since this swing low back in November is even though it's up and down, this is still in an uptrend. And the thing I want you to notice is we do have good momentum. That hasn't changed. One thing that concerns me that from the last half of the week is we did sell down with increasing volume. So we need to see what happens here. And we are still viable in this trade. Um, if we drop down and hit this anchored VWAP at $22, that's still 20 to 22 is still a buy if it pulls back for long-term investing. All right. So IonQ, it is kind of trapped between two critical VWAPs from our discussion last week. We were at the bottom of this range and it did exactly what I told you it would do, didn't it? I said that you get between critical ankle VWAPs, it starts to form a pressure cooker. See how we're doing that between them? At some point, it's going to make a decision to break down or it's going to make a decision to break up. If it breaks up, it'll head to approximately $55, right? So those anchored VWAPs are forming pressure on price. Pressure on price helps movement and then is accelerated by, say it with me, volume is the second thing you need to look at. I don't care what magic indicator you have, RSI, stochastics, MACD, you know, Jim Bob Joe's algorithm that he sells on Instagram. Those don't matter first. Price and volume are the only thing that matters first. Then you stack those indicators on top of it. Take it from me, right? I'm not the average Joe who does this. I have an education and seven-figure accounts built on that education. So there you go. That's IonQ. One I want to bring up is OPAD. It's one that I recently alerted my traders to. Let me switch this to the hourly. You'll be able to see it better. This was a pre-market volume leader. Oh, you can hear my dogs in the background. I'm a dog lover. Sounds like somebody's here. Anyway, this was a pre-market volume leader. I identified this as a scalp, taking 10% if you wanted to just day trade it, or a scalp to swing based on a 3-day news cycle, and then critical measurements on the wider time frame. Here's what I mean. I said that if it hit, and you can see this gray area is pre-market, so this darker area here, kind of like the tannish brown, and then this is at market. So it tapped into at market pricing right here. So it was a buy in around 215 and then was a sell about 245. Guys, that's your 10%. So congratulations, I had a number of my day traders who hit this on a scalp. I do believe based on the fundamentals and catalysts in this, and you can make sure you go up and do your own research and your own due diligence, that it is still a buy in this area, right? The $2 to $2.30 that VWAP is going to be critical here. in that we can trade this upward, and my price target is about $4, right? Wider than that, if this continues up, we're looking at, there's your $4 mark. That is the purple line, guys, is not the all-time high. This is one thing you have to know about how stocks. That is the all-time high is tough to go back and measure. The reason why is I'll show you. See down here that gold S? That is a split in this stock. Either a reverse split or split, they're identifying it. So prices before that are back calculated and are misleading. So my purple line is my high of the stock post split. I teach all this, guys. You can hit me in the comments, ask for my courses where you can start to see this for yourself. Because ultimately, you don't want me fishing for you. You want uh, you want to be able to fish for yourself. So, but my point is, we're going to head to that as resistance at $4, and then we have the all-time high in IPO. So at TP1 would be, 350 to $4. TP2 would be 775 to $9 if it were to continue up, right? But as usual, let's talk about this. I'm just talking about this stock, but this is true in all styles of the way we trade. You enter this, if you enter this, you have a stop loss comfortable with your risk. What might that be based on what the chart says? Say you buy $2. I'd put a stop loss either at 180 for tight, or you can do a dollar. Okay, you can be down at a dollar, or that's probably a little too low, or $1.50. All right, so you got a 50-cent stop loss. So it's relatively low risk, isn't it? For we're talking 50 cents to a dollar risk for a potential 100% move, right? And then you monitor it, and as the trade develops and begins to rise, you just follow it with your stop loss. So oftentimes what happens to me in these trades, let me remove these Fibonacci's. That's what those lines are. What happens to me is in trades that I enter, right? I enter, and let's say that this is my entry. Okay. We'll make that a green line. I'm going to do a little teaching for you folks. And my stop loss, let's say I put it at $1.50. So I have approximately 50 cents of risk. So I want you to notice, and then my take profit, where I've identified is here. Now, as the stock goes on my side in this line, let's say this represents the rise in the stock in the coming days and week. This is probably a week to 2 month trade. Rises. We now need to chase that upwards by getting to break even first. So I have no risk in this trade. My only risk in the trade is the time on my money as it sits because I'm not using it elsewhere. All right. And it goes up and it fluctuates and it comes down and it fluctuates, but it's chopping up. And now we're approaching that VWAP. I'm going to continue to compress it, right? Let's say I'm here, price comes up and then price shoots down. So then I would be kicked out here. So I'm either going to be kicked out at my take profit or often in my trailing stop loss. Guys, this is how you successfully trade. I would, I don't know the percentages. I apologize, but more often than not, I hit my trail stop before I hit my take profit. And I'm extremely happy about that, guys. That is solid trade planning and trade monitor discipline. If you do that, you will be a successful trader. The education part helps you identify what is a good trade, right? All right, the moment you guys have all been waiting for, because I know so many of you guys love metals and trade metals. Let's get into them. Again, hit me in the comment section down below. If there's something that I'm not covering that you think that is important that I cover on my weekly updates, I'll definitely consider it. I normally cover the things that I trade and the things that the groups I work with trade, right? So XAU, we're going to go back to that same theme that I started with indices. What was it, guys? What was it? Say it with me. All-time high, anchored VWAP, and all-time highs. So let me zoom into this chart for you so it's a little easier to see. Make it a little bigger for you. All right. The white line represents, let me bring that candle to the front. There you go. So you can see the full width of that candle, and the white line represents last Friday. So after last Friday is the only information. This is where we were when I did my last report. And I had said, guys, the all-time high was playing defense. You can see that. The all-time high anchored VWAP. Here is our all-time high. Here's the average volume weighted or the volume weighted average price based on that all-time high. All right. If you don't think VWAPs are important, you're wrong. Institutions use them. I double weight my VWAPs in terms of determination and confluence because they are that important. You and I, retail traders, trade moving 100,000, $1 million, $5 million is chicken scratch. It isn't shit compared to what these institutions move. And when institutions use VWAPs, you had better too. All right. We were rejected multiple times. And then what happened Monday, we had a nice explosive movement across. So that was a closed filter of the VWAP, which is a buy signal. We rose on a second day, which is confirmation of that. We came back and we nearly retested it. Remember, there is a standard deviation zone around that. You could say alpha, it didn't touch it exactly. It won't always. It's psychological positioning that deviation around it, or there are narrow bands that follow it. It's a deviation around that mean price. Okay. So it came in and it touched it twice, ran off of it, and then look what we closed the week with strong momentum. That indicates to me that now the all-time high anchored VWAP is holding, and I would anticipate with increased volume, as I know that that's part of how my matrix calculates, that we're going to challenge that all-time high at 45.50, right? Now, will it break the first time? My argument is no. We may come back down to where this all-time high anchored VWAP is before we come back up. This would be another buy opportunity if you've missed. If we hit that all-time high anchored VWAP, I recommend that as a buy with disciplined stop loss. So I said no, but this is a very key level. You can see how many sellers sold at that level, right? There was a lot. The fact that a lot of sellers sold there on this volume tells me that there may not be as many sellers positioned there. So it is a weakened level. But it is impossible to break resistance levels without hitting the gas pedal, the volume. So if we get a nice volume spike, or of course, what can create a volume spike? A catalyst, right? Or enthusiasm. It may break on this next attempt. So it's going to be the same story with um, silver. Look, guys, last Friday we closed below the all-time high anchored VWAP. Monday we crossed it. Tuesday we crossed it. Wednesday, Thursday we tested. We had this line all the way through it because the beta in silver is crazy, right? This was the buy zone I gave everybody, and guys, you had one, two solid buying opportunities on a discount. We called this buy in around $75 like crazy in my groups, guys. If you bought at 75, you're up almost $5. That's awesome, right? And then we're going to challenge this all-time high resistance zone, which is the full wick of the day that it set that. All-time high anchor VWAP is held. Same story is in gold. I anticipate us coming up to challenge that again. It will not break unless volume pushes us through, right? If it doesn't break and you didn't get in, or this is a great place to TP. But again, a lot of sellers were satisfied here, guys. You got to watch that. But your next buying opportunity is if we reject and come down and where this will rise. So wherever that price lays, and that might be 76 or 77 before it goes up. JP Morgan Chase has a price target now. And remember, JP Morgan Chase was one of the banks, the largest banks to short silver. They have secretly overnight changed their position in their manipulation of the market. They now have silver priced as a price target at $309. $309. Guys, if you bought today at 79 and it threw back to 70 and you're underwater $9, you don't care when it's at 309. That $9 doesn't make a difference. The problem is if you're trading leveraged products, you got to be careful, right? $9 a drawdown on a leveraged product can destroy your portfolio. Again, if you have questions, hit me in the comment section. I'll be happy to answer them for you. But I anticipate a challenge into this red box between, we'll call it 82 and 84 this coming week. Platinum. Very, very same story. We closed below. Let's bring this to the front. Guys, if you want to learn how to do this, you see how I have an indicator that is kind of blocking the wicks. All you do is you click on the candle, right click on it, you go down to visual order, and I say, bring that to the front so I can clearly see, so you can see where the wicks exist. We closed below, and then Monday, Tuesday, rose above. Wednesday, Thursday, we test. This is known as a false break. I started to say that in silver and kind of did it. These are false breaks of that all-time high anchor VWAP. So that is still, even though it pierced it, that is still considered that it held because the close was above it. It's about the close price. And we called all week, guys, because I love swing trading platinum. I called this for everybody. Whoops. buy in around 2200. And that's a 15-point buffer zone, 2185 to 2215, right? So if you bought that, now you're up. It's still a buy zone if we retest it, but you would put your stop loss just below it, say at 75. All right. So this hold above to me looks like we're gonna continue to move upwards and challenge two levels. This level where you can see those wicks occur, and then the all-time high. The only thing that is different is we're throwing dojis here. These doji candles expresses the extreme war between buyers and sellers, right? So sellers here, buyers here. Not having a strong, full real body of the candle and lower momentum tells me that we may drop before we rise, right? What does that mean for you? That means buy the damn discount, people, right? XPD, so palladium, same thing, guys. I told you this video would be the story of the all-time high anchored VWAP to the all-time high, right? Closed below it. We were defended. We closed above it Monday, Tuesday, Wednesday, retest, false break, Thursday, false break, and now we're running. So again, I anticipate that we rise up. But like platinum, sorry, we have lower volume. And because of this lower volume, I want you to notice something. You do not see my green or even yellow dot on there. So momentum is not strong upward. So your discount range in this is still about we'll call it one or 1775, 1725 to 1775 for a potential buy. And it's proven multiple times earlier that the 1625 to 1675 was a range, but it might be a little higher here for a discount buy. If we get explosive movement upward and we get the early recovery and green bullish momentum, then we're going to see that all-time high again. And again, that resistance zone is in the wick of that all-time high candle, right? Right. This is where sellers began to overwhelm buyers. Buyers pushed the price there, and then sellers took over, right? Um, yeah. So there you go. More upward with platinum and palladium may provide a discount before rising. XAU. Let's talk about copper. Um, I don't want to beat this dead horse, guys, but you see those green zones? We yelled, buy it here. Okay, I missed it, Sean. Okay, buy it here. Oh, I missed it. It came almost back down and tapped that exact buy zone again. You can see where we were Friday. So as we're tapping the zone, I said, "This is a buy, guys." And then it ran right to that all-time high resistance zone, closed above it, but wasn't able to hold, and we fell back down to the discount, and now it's going to re-challenge it. When it re-challenges it like that, we have to know that with that price and that volume, that sellers may be satisfied. So the next attempt, as long as volume increases, will now push us through this level, right? And we've had bullish momentum despite these retracements way back since just before Christmas. This is a strong mover. You could begin to size in almost immediately. Be willing to buy it here, willing to buy it a little lower, and be willing to buy it when it breaks out of this. This is why in all trades, guys, I don't recommend whatever your portfolio allotment is for any instrument, you don't put 100% in it. Let's say your portfolio allotment is, I'll make it up, $10,000 for this instrument. You put a third allocation in now because it's looking good. You're willing to buy a discount at a third down here, and then you're willing to buy it on a breakout a third up here. So you're going to get a good DCA. And of course, they would all maintain the same stop loss. Again, questions in the comments on trade development, put them down there. That's why I exist. All right. I'm here to educate you on trading. So, without further ado, guys, that is the weekend update. I want you to know that I'm here to help you guys. I'm here to tell you about my trades, my wins. You can see I do a lot of wins, but guys, I have losses also, right? They're discipline losses. They don't upset me. So once you learn how to do this, you then learn the psychology of trading. That's the next step, right? You have to foster. You have to find out if you're aggressive or conservative. You have to determine your risk profile. And I teach all that, guys. Hit me in the comments. I offer multiple workshops and courses on how to learn this. My time, I do one-on-one private lessons as well. Those are few and far between because I'm extremely busy, but I do have clients who do private lessons if there's something you need specifically cleaned up, or if you need help with managing your portfolio and where stop losses need to be, you can always reach out to me and we will do an analysis of your portfolio exactly. Now, it will ultimately be your decisions. I'm just an expert helping guide you through making those decisions with the if and buts, pros and cons of each position. And as usual, guys, I love working with you folks. I love seeing you succeed, and I'll do this weekend update again next week.